So in this video, I discuss how to trade the daily time frame chart, and this video will be extremely helpful for part-time traders and working professionals. I have covered basic price action, volume analysis, and this time I've also covered something with respect to delivery volumes and how you should be using these. And towards the end of the video, I've also explained how to plan your trade and how to trade based on simple price action concepts on daily time frame chart. So let us take up Chola Investment in Finance as an example. The first step in daily time frame trading is to determine the overall direction of trend, and then I'll come to the breakout segment. So if you look between November and December, trend is clearly on the upside. Then price went into consolidation for entire duration of December, and today we have seen a breakout happening on the upside. I'll come to this phase in the next slide. If you just take up the trending phase between November and December, just take a look at the range of candles. Clear range expansion is visible only on the upside. There are just a couple of bearish candles that you can spot. This is candle number 1, this is candle number 2. These are some sort of wide candles. But if you take a look at volume activity is not that great in terms of what has happened when price has expanded. In case subtitles are blocking the volume chart, please turn the subtitles off. Now take a note of volumes when price was moving on the upside. So this was a wide range candle, couple of wide range candles here. Look at the volume expansion that has played out. Similarly, on each instance, if you see whenever volume expansion has happened, that has usually resulted in a range expansion, that is wide range candle on the upside. So this clearly denotes that stronger participants are present in Chola Investments, and this presence of stronger participants is what gives the consolidation phase a meaning. So let me now explain what has happened in this particular phase. So for those of you who have watched my pullback trading series, you would identify why Chola Investment is a perfect structure in terms of pullback trading. And now we are seeing a final breakout playing out. So let us now try and understand this consolidation structure. So in this range, again, you can see this is one bearish candle and this is another bearish candle. Most of the candles here are indecision candles. That is, they have some element of wick and some element of long tail. In some cases, you're also seeing some narrow range bodies, but again, this contributes to the candle being an indecision candle. So this candle here had some sort of volume expansion. But if you look at this particular candle on 21st December, volumes were not that great. And again, this candle did cause some bit of downside expansion, but there was no follow through and price again started moving higher. So what has essentially happened here is that as price was moving higher, volumes were clearly expanding. You can clearly see there's a bulge in volumes here. This is deviating away from the average volume structure. But when price was consolidating with a downward bias, take a look at the volumes here. Volumes are clearly heading lower. So this tells you that in a trending structure, when price moves up, volume also moves up. But when price consolidates, volume moves lower, which actually tells you that whatever buying has happened during the trending phase, those stronger players have not exited their position in this consolidation phase. So this is a very simple structure that plays out on daily time frame chart, even on smaller time frames, but on smaller time frames, there is higher degree of failure. So in this session, let us just mark out the near-term demand and resistance level. This will be used in the last slide to determine how to approach this stock. So in the near term, if you see these two long tail candles between 340, 350, this would be some sort of positional trading support in the market. And when it comes to swing trading, I would use somewhere between 370 and 380 as a short-term trading, swing trading support level. So this is for short-term trading, whereas this level is for positional trading. When it comes to something like day trading, in case you are interested in that, although I will discourage in the current cycle is for longer form of trading. In day trading, you can use something like 395 or 400, this particular zone as a valid support level. The main reason for this particular level is if you take the previous resistance level, it was somewhere near 390 and 400. So this was prior resistance. And since price has now broken out, this resistance level has now become support level. So this is a concept of supply turning into demand zone. So for the last section of the video, I'll take 370 and 380 as a reference level. This is just to explain how you should approach the stock heading forward. So what we have seen till now is that we have a clear uptrend in place, then stock has consolidated, and now we are seeing a breakout. What I like about this particular breakout is that if you look at the range of candle, it is the widest in the last 20 trading sessions. Take a look at volume expansion. Just go back to the previous chart. Volumes have clearly expanded. And when it comes to the relative strength of the stock, that is price of the stock divided by Nifty index, you then get this relative strength line. You can clearly see that you have a fresh breakout in the relative strength line also. So not only this stock has broken out after a clear uptrend and some bit of consolidation, it has broken out in terms of outperforming the broader market. So this is something I definitely like to track when it comes to daily time frame trading, because more often than not, this will keep you on the right side of the market. Now, I have done a detailed series on relative strength. Just click on the eye icon here. You will get the link of all the videos. So let us now discuss the delivery volumes in this particular stock. Since this is daily time frame trading, so I do take a look at delivery volume data. Delivery volume data is freely available on NSE website. Just Google about it. So I'm taking delivery volume between the entire month of December. That is when the consolidation phase was going on. Because when markets are usually trending higher, then delivery volumes are always on the higher side. So the first day of December, we had delivery volumes of 5 million. The next significant bit of delivery volumes came in this particular session, 3.8 million. Then it was 1.8 million when we had a long tail candle here. Then it was about 1.7 million on December 21st, where we saw knee-jerk reaction in the market. And now on breakout, we are again seeing 1.7 million delivery volumes. In general, if you see, during this consolidation phase, the average delivery volumes was only 0.6 to 0.8 million. And if you take a note, most of these sessions are where price has closed lower. These are the sessions where in general delivery volumes were on the lower side. And if you take a look at this candle here, again some sort of support candle here, one more long tail candle here, couple of more long tail candles here. This is where above average delivery volumes have come in. So in a consolidation phase, if you see, this is where understanding delivery volumes is important. Most of the times you will see traders are paying a lot of attention in this phase. I feel this is not exactly a true picture of what is going on in the market. It is only in the consolidation phase that in-depth volume analysis and delivery volume analysis gives you a clue about what is going on. And in this stock, if you see in the consolidation zone, whenever price was trying to move lower, delivery volumes were on the lower side. And it tells you that whatever positions were built up during this phase, this was just a phase where a lot of selling was being absorbed. And again, today price has broken out with 1.7 million delivery volume. So this is telling you that trend is here to stay in this stock and price should be heading higher over the next few weeks. So when it comes to how to plan a trade on a daily time frame chart, it is actually much more simpler just because this is a higher time frame chart. In case you're a longer form of trader, you can just keep 345 as a stop loss. That is what I would do. And I would simply accumulate if stock consolidates some bit more. So this will be my accumulation region and I will stand to benefit whenever price moves in the direction of trend. At any given point of time, I would be knowing my risk because this is the defined stop loss, that is 345. One more advantage of daily time frame is that you will give stock a lot of time for it to consolidate and fall a little and then start again moving in the direction of trend. This is where a lot of people start exiting the positions because as soon as breakout happens, let's face it, most of the traders rush and take positions in FNO and then they lose money. So this is where a lot of impatient people will be getting out of trades, and because you will be in equity segment, this is where you can accumulate and plan for a later stage. So the second way of entering is if you're a breakout trader, price has already broken out of the prior resistance. Price is currently at 411. So a breakout trader would take positions right away on Monday and would keep a stop loss of somewhere between 370 and 380. So if you recollect, this was the stop loss level for short-term trading, swing trading, and this was the stop loss level for little longer form of trading. The only thing is that for a breakout trader, risk reward is little bit skewed because as I said, markets are mature and we can see some sort of pullback happening in the market. And whenever price pullbacks a little, that is where your risk reward is in your favor. See, the thing is, 90% of retail traders are always trading at 5-minute, 15-minute, 30-minute time frame chart. What I suggest is that if you're a beginner, if you're a retail trader, first start with daily time frame trading, get better here, have at least 18 months of practice, and then begin moving down to something like lower time frames. If you start trading here, by the time you realize that it was daily time frame where you should have begun, this is where you would have lost a lot of money. And now since some of you are channel members, you would be seeing that in the community section, I only share charts of daily time frame. That is, I take daily time frame chart as the analysis time frame. And then to time entries better, I only use something like a 60-minute time frame chart. I rarely post chart of 5 minutes, 15-minute, 30-minute. In fact, I think in the last 3 to 4 months, I have never posted a chart of 5-minute, 15-minute. Because you have to realize the underlying cycle that is in play in the market and then accordingly play to your strengths. If you always stick to lower time frame, over a period of time, you will keep losing money. So do what is right in the market. Your growth will be slow, accept it, get better at trading first, and then think about making huge returns in the market. So just click on the eye icon here. I have posted link to all the related videos, and I've also given the link in the comment section below. So thanks a lot for watching this video, guys. Kindly consider hitting the like button if you find the content useful. Have a great weekend ahead. Take care and be safe.